Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Monday the 7th of November. Now more than ever you may need personal MarketClub coaching. The call is free, just call this number on the screen, 877-219-1482, and the consultation is free. Just see if it's right for you. You have nothing to lose and everything to gain. Is Rome and Athens rearranging the deck chairs? Changing the leadership in Europe is sort of like rearranging the deck chairs in the Titanic as we steam forward to meet that financial iceberg. Talk that Berlusconi is going to resign and that the present Greek Prime Minister Papandreou is going to resign when the new coalition government is formed is all about kicking the can down the road and delaying the inevitable. No sooner had we thought that the problems with Greece were over, who are we kidding on that, when Italy pops up on the radar screen. Now, Italy is a much bigger problem than Greece. The amount of money they owe is staggering, and Italy will be impossible to bail out. So as I said earlier, they can rearrange the deck chairs, but everyone owes too much money, and we appear to be still heading for that big iceberg that is not going to melt anytime soon. Even with the new governments and heads of new governments in place, the problem remains a gigantic amount of debt that's still out there that has to be paid back, written off, or disposed of. I can't imagine Greece, which is a small country, suddenly having all their citizenship agree to what will be a very austere economy. No economy ever grew when it was contracting. It's a contradiction. It's just not how economics work. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. Okay, so you give us a call at the 877-219-1482. It's a free call and a free consultation. And just see if Market Club personal coaching one-on-one is right for you. So let's go to the charts. And we're going to be looking at a few different things today. We're going to be looking at a Greek ETF index. We're also going to be looking at the Euro. And we're going to be looking at the NASDAQ. So let's just go to the NASDAQ right away. And you can see the actual performance right now is not good. This is a daily chart. And we appear in a minus 55, which is a trading range. And as we normally would do, we would put on our Donchian trade channels. And we'd also put in our potential parabolic, the PSAR. Parabolic stop and reverse, that stands for. So let's put that in. You can see we already have reversed on this particular index. And also the other thing to look at is, as we go down, is this right here, the MACD. It looks as though it's just beginning to turn down after being up since about early October, actually around October 10th. So it's been up for a month. It just is beginning to turn down. I think if we get a lower close today, let's say around the certainly either 2650 area or even lower, I think anything south of 2650 is going to put pressure on. And the same thing would happen with the S&P 500, which I'll show you tomorrow. And that's if we close below the 1237 area, that's going to be very, very negative in my opinion. So again, we have a longer-term negative triangle, a red monthly trade triangle. We have a weekly positive trade triangle, conflict there, and we have a daily short-term triangle. Now, the ones we really focus on are these two right here, the monthly and the weekly. Now, with the weekly being up, it's giving you this sideways action. This is the trading range, the minus 55. But if we see that turn down anytime soon, and potentially we could see it turn down, then I think this market will be in a whole mess of trouble. So let's go to our next market, and we'll go back to our portfolio, and that's going to be spot silver. Now, spot silver, a lot of activity in gold today, but spot silver is not participating. We've talked about this before, is that this is kind of like people say, well, gold's going up, oh, silver has to go up. Well, not necessarily. If people are looking at this as an industrial metal, I mean, look at this market. This has really gone sideways, whereas gold is making new highs. So you have a minus monthly, a positive weekly, and a positive daily. Now, it looks as though you're just sort of going sideways, and it may still go there, but we're contracting quite strongly in terms of the contraction of the Donchian trade channels, and also look at the PSAR, which is getting very close to the center line. If we go below that level, I think we'll see the market go lower. But right now, what we're seeing is this market stuck between a trading range between $32 and $36, and I don't think that's going to change anytime soon. Now, as we go to gold, this is a completely different picture. And as we said before, with gold, with a score of plus 100, it's indicating us to be very concerned about the world markets. And it's been telling you this for some time. Our long-term gold indicator, monthly, look at this, from 1430 remains positive. And we've had this big move down. We're coming back up. Now, the 1770 area, which we talked about last week, is a 61.8% Fibonacci retracement. We've obviously surpassed that. But the reality is you've got to pay close attention to these markets. Again, we are seeing a strong MACD. We're overbought. That's okay. We're above the PSAR. We're just out of the top of the Donchian trade channel. That could be a problem, much like it was here. We see a pullback. So I think for the moment, the trend is clearly up with a plus 100. And I think a lot of people are insuring their bets with being long gold and short Europe. And we'll talk about that in just a little while, a little later on. So let's go to our next market. And the next market we're looking at is copper. Now, copper, on the other hand, is really not acting so well. And as you can see, it sort of moved sideways here, and it really is just barely above the PSAR. Now, if we go below that level, I think we'll be seeing some pressure coming to this market. Now, we think the 350 area is the key support. Now, we're trading at 354, so we got down there this morning. We got down actually to as low as 349. We popped back over that level. But I would say if we close below 350, I think you're going to see a lot more pressure coming into this market. Now, the PSAR today is 348.78. If we go hit that later today, which is very possible with these markets, I think we could see this market come under pressure. Again, if we go down lower, you'll see we're just rolling over here, very close to rolling over. And if that's the case, we'll see certainly some further downside pressure, perhaps down to the 310 level. But the thing to look at really is the long-term monthly. Now, this is what I think is happening. Copper is an industrial metal, and if things slow down, they contract around the world, both in China and the US and in Europe, then the demand for copper isn't going to be as great as it once was. And as you can see, just taking this out for maybe a couple of years, you can see we've actually come down quite a ways. We've had a little rally, and let me go in and we'll just do a quick Fibonacci on this to see where we are. So here's the Fibonacci tool, and let me take off the monthlies because I really don't need this right now. Let's take a Fibonacci tool, and we'll go from right here, drag it down, right on the 61.8% retracement. We pull back from there. Now the question is, are we going to stay at this level? And that's a really good question. I think for the most part, we have to look at these lows, and the highs are still lower than this high, lower than this major high. And I think if we take out the 350 area and close below that, I think this market's going to start being on the defensive. So really you want to pay close attention to that market as well. Now going to the next market, which is crude oil. Now crude oil is interesting because it's sort of acting somewhat like gold in one way. In another way, it's back into an area of resistance. The 95 level, we've talked about this as being resistance all the way up to 100, but the reality is this is very similar to what happened here. It looks like it's breaking out and just sort of moved sideways and suddenly boom. And I think that's what we have to be aware of. But it looks as though we're sort of trying to track gold more. You can see it just, for some reason, it just doesn't have the enthusiasm. Nobody has the enthusiasm to push this market higher in a very convincing manner. Now, it is at the top of the Donchian trade channel, like it was here, came back in. So there's a very, very good chance it's going to pull back in. And if we go down here, you can see we are overbought. We're beginning to slow down the momentum slope here on the bottom. You can see that's getting lower, 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 lower. And if we see this turnover, then I think that's going to be a pretty important level, because you can see really we turned up in this market just around the early part of October, and we've been going sort of steadily, either sideways to higher, but generally speaking, from this point here, it's moved, a good $12 to $15. So that may be all we see in this market for the time being. So let's go to our next market, and we have some more markets to look at today, as I said earlier. And this is the dollar index, and this is very, very interesting today, and I'll show you why I say that. So as this is coming up, I'm going to scope this out just a little further, and I'm going to, you can see we've obviously, the parabolic, we've taken off that. But what I'm seeing here, and I want to clear the screen, I'm going to take off my Donchian trade channel and also my parabolic. And what I'm seeing here is, take this off, and I'll get my illustrator, and I'll show you what I'm talking about. So what I'm seeing here and what I've written about on the blog is this. It looks to me as this market has had this move up, which is right here, and what we're forming right here is a pennant. Now, pennants are normally continuation patterns. So I think if we break out, and I would say the breakout would have to be a close over 77.50, then I think we're off to push this market to test the 79.50 to 80 area. So right around these levels, I think that would be the target we would see for this measurement. And how you measure a pennant, you take from the high right here to the low, measure this distance right here between the two highs, and when it breaks out, that's where you measure it. And this is where the measurement would go approximately 79.50 to 80 on the upside. So that to me is a very strong, the pattern here is I'd say it's a pennant, and that to me is where we're going to see this market go. So what's the close? 77.50 is very, very important. So let me clear the screen, and let me go to, hang on, let me go to, take this off and go to the next market. In the next market we're looking at is the CRB Reuters Jeffries CRB Commodity Index. And as you can see, it really is beginning to, it looks to me like you potentially beginning to roll over like this. Very similar to when it did it here and here and here to a lesser extent. So it looks to me, we've talked about the lower low, lower low, lower low. If this is a lower high than this high, then I can see this market coming down to test these lows again. So let's see how that plays out. But generally speaking, we can put our trade triangles on there to get a sense of where things are. And the reason it's mixed is because we have our monthly trade triangle, which is down, and the weekly and the daily positive. So you can see there's a conflict there, and of course that's giving us the sideways, the trading range level. And if we put in our, we'll go back with the, let me just take this off the screen because it's going to get very confusing otherwise. And let's go back to putting our Donchian trade channel on and our parabolic so you can see. So here we have the Donchian trade channel. We moved out, we've come right back in, we're sort of testing it again. Certainly the 315 area is very key. If we break below that, we'll see further evidence of weakness. And of course this is 314.04 is where the SAR is. And again, if we go down here, you can see the market has come from a very oversold condition, but it looks like it potentially could be rolling over again. So pay close attention to that, and I think that'll be very interesting. Now let's go to some markets we don't normally cover, but I wanted to cover them today. One is the euro, and here's the euro. It's been very, very perplexing for a lot of traders because you would think all the stuff that's going on in Europe, you'd be really under a lot of pressure, but let's take a look at how we see it right now. First of all, the monthly is down, which is a very, very big thing for the trend, and the weekly is up. So you've got that conflict. It's just trying to develop a stronger downtrend with a minus 75. Not quite there yet, but it's when you get to a minus 75, it's like an emerging trend. But the one thing that I want to share with you today, and I'll take this off the screen because I think this is pretty interesting, and that is if we look at the markets again, and we just, this is going to be to me the line, literally the line in the sand, because if we go below this level here, which is right around the 136 level, and we see a close down here, and it may be later this week, I don't know, but this is definitely, that would definitely be a top. It would probably zoom all of our indicators into a minus 100, meaning a very strong trend. This is just a like tip of the iceberg in terms of the minus 75, the emergence of a trend, but certainly that is something that you want to see. I think you could see this playing out pretty well. So let me just clear this off the screen. So something else I want to share with you as well, and that is you can see how this market has come down, and I'll just draw this again. You can see how the market's come down like this from this level here. We're sort of getting this very, very tight little pennant again, very similar to the market we shared with you, the dollar index, except the dollar index is the reverse. If we break out, as I say, below 136, I think there's a good chance you could measure from this level here, 136, to the 142 level, which is about 6 big handles. That would take you down to the 130 area, which I think could be very, very interesting, which is right actually lower off the chart. So let's see how that plays out, because we could go into a rapid decline here if people start losing faith in the euro. And remember, this is all about faith, and sometimes it's a very hard thing to prove. But let's go back to our markets. And the next market we're going to look at, this is the Italian index. It's an EWI. It is an ETF. And I think when you see this, you'll be pretty amazed. So here we are. Obviously, our triangles are all negative. They have been. We got a monthly trade triangle at 16.92. You can see it here. And that was back in late June. And so we've been basically negative on this market all along. And there are, with the weekly triangles, you can just put those in. You can see there's a weekly buy here. That's not to go long. It's to cover short positions, because you want to use the monthly as the trend and the weekly for timing. So you can see we got short again at 13.02. The market's currently trading 13.05. You still have the opportunity that all the trend is in place, and it looks as though we'll go down and test the 11 area, possibly even go down to new all-time lows. But this is turned down here again, and if we put our parabolics on here and also our Donchians, you get a sense of where things are. So again, we popped out of the channel. We're back in now. We're below the PSAR. It doesn't look that great. It looks like you're going to see some more pressure on the downside there. So there you have it. This is Adam Hewis, and if you haven't given us a call, give us a call at the number on the screen for personal one-on-one Market Club coaching. This is really the time to do it, because we're coming into 2012. There's going to be some great opportunities, and I want you to take advantage of it and learn how to do this the right way. So Adam Hewison from Market Club, thanks for stopping by. Every success. And I'll be back tomorrow, same time, same place. I'll see you then.